everyone. Happy Wednesday. Wednesday inflation data day. The CPI came out this morning along with some market movement, right? We saw that yesterday we had the PPI pre-market, and today we are met with the CPI here pre-market, and so far prices are holding up pretty well. The bull case is still fairly intact. After the CPI data came out somewhat flat realistically, but all in all, we're still sustaining some of this upside press. Both the S&P and the Nasdaq are higher here from the overnight sessions. Not like by crazy amounts, but still sustaining pretty well. You can see there were some volatile spins up and down, but overall we are above yesterday's highs on both of these assets currently. The CPI, US CPI year over year, it was expected to come in at 3%. The prior was 3%, and it came out at 2.9, so a slight little beat there. We also had the US CPI month over month. The expected was 0.2. It came out at 0.2, so as expected. And then what we had was the core CPI month over month, 0.2, expected 0.2 came out. And we had, what did we have? The US core year over year, 3.2 was expected, 3.2 came out, and 3.3 was the prior. So things are, they're coming in as expected, which is fairly bullish, right? We saw that one of the figures actually beat the expectations, which adds to a little more of this upside, but it's not like we saw that massive inherent move off of this CPI data, right? The S&P and the Nasdaq didn't just like burst up super aggressively, right? They are up, they are holding pretty well right now, but it hasn't been a very drastic move to the upside swing as the markets continue on their multi-day rally after hitting a low just once last week on the Sunday reopen, Monday starting of the session last week, and ever since, right, we haven't tested those lows, and prices have been still happily riding to the upside swing. So there's not too much news to look at other than the CPI data. We have central bank news that came out of Japan as well as New Zealand. New Zealand Central Bank is the latest to reduce its benchmark interest rate, surprising markets for the first cut since March 2020, and a year before its own forecast. The Federal Reserve, or the Reserve Bank of New Zealand, lowered its official cash rate by 25 bips to 5.25, flagging more cuts ahead as the economy contracts faster than expected. And the decision follows rate cuts led by the EU, the UK, and Canada as well, all moving before the Federal Reserve in the States. So the expected first cut is in September. We'll see how valid that is realistically, but that's when we're expecting things, right? The probabilities now stand, I think, like around 90% if I'm not mistaken. Let's take a look at here. FedWatch futures. This is what I like to look at if it wants to load. So, interesting. Now, there is 0% chance that rates stay the same, but there is now a 60-40% chance in favor of one cut versus two cuts in September. I think two cuts could be a little dire, but they're starting to price in a decent probability of the chances of two potential cuts in the US. So we saw that, we talked about the CPI here a bit more cooling in the inflation gauge. That's probably why we're starting to see the potential of possibly two cuts, right, coming out in September from the Fed. So that's going to be an interesting look ahead. We also had, after a week of turbulence, specifically in Japan, Prime Minister Kishida has announced that he would resign next month amid waning popularity in the wake of the political scandals. I think I saw this somewhere, like popularity rankings from world leaders. I think Japan was like the worst. I think Japan's, what was it? The, not acceptance, what was the word called? Whatever, the rate that they like their leader, and it was like approval, geez. It was 17%. 17% out of Japan. I think that was the worst one that I saw. So he declared, I made this heavy decision thinking of the public with the strong will to push political reform forward. Public support for Kishida has weakened in recent years after revelations of the ruling Liberal Democratic Party's ties to the Unification Church and undisclosed donations from the fundraising events, as well as rising costs of living that have outpaced growth. Surprise, surprise, it seems like that's everywhere. So overall, right, not too much on the news front today. We had the CPI, the Consumer Price Index, that came out that we talked about. Generally, markets are still up here pre-market in the US as well as across the board. Right now, if we take a look at this, some interesting stuff's going on in this equity market on the S&P 500 specifically. We'll take a gander at this, but yesterday we had a strong trend day to the upside. And we had a lot of volume getting congested into these highs. That doesn't necessarily mean that we're starting to pull down, right? It's not necessarily a bearish sign, but these areas to hold will continue that momentum to the upside swing. So far, they are holding, from the overnight lows. We're holding some bullish press, and into this 75 is a start of yet a new distribution to the upside, which can take us to 55.10 on today's session. That could be a very interesting aspect. So realistically for me, as long as this low 50 on the S&P holds, or right, the final chance in my opinion is around that 54.45 before we start to see a little tumble lower. If those areas hold, I think that we could be in the regime for some dip buying to come in. And try to press into a high above. If we start flipping under the 54.45 today, we have a lot of imbalanced movement. It's the bottom band of this heavier volume, where I could potentially see some of that downside coming in, but the downside targets are fairly limited. I'd limit them to 35 and then down into that 15, where we're still technically in a bullish structure and bullish momentum where the buy side can just eat up these more extended dips. So I am leaning a bit to the long side, realistically. I'd like to see what happens at 54.45, and then we'll kind of gauge movement from there. But if we do break that 50 area, there's a lot of congestion of negative delta into those lows, right? If we take a look at these delta graphs here, we have a lot of negative delta. So it's going to be, one, very hard to break through that area. Two, if we do break through that area, I fear that the sellers are going to gain a lot of confidence here and start bullying the buyers, and we're going to see a more significant downside press where buyers are most likely going to try prices lower before we get some more buy momentum in these markets. So that's how things stand in my view. That's what I'll be watching today in these markets, and we'll go from there. So Wednesday, happy trading, midweek day. We'll see you guys tomorrow. Let's open up our live trading room. Yesterday we caught a nice little trend move to the upside, and today we're kind of in limbo territory, but the bull side is continuously the right side as things stand. So let's see how that